Hello everyone, I wanted to make a new video series talking about trading and emotions. Over the last few years, I've developed systems to trade extremely well with entries, generating my own ideas, risk management, position sizing, understanding technical analysis, reading level 2, understanding price action, market emotion, different tickers, personality, you name it. Fundamentals, research, everything out there that will allow me to, have a good trade plan and know that I'm going to be right a large portion of the time and have a true edge in the market. The reason I'm making this video series, though, is I believe one of the best ways to learn is to teach and talk about things that you're learning about. So I think by me running through this, I think it's an interesting topic. I think we all do it, and I think we're all interested by it, and I think we can all benefit from it. And I think that I will learn a lot as I go through this with you. As I go over this last week, every single trade that I did and how I was feeling during the trade, what action I took, and what action, most importantly, I should have took. So basically looking at the emotional trader versus the probability rational trader. So, the first thing I really want to talk about is, what is, trading is kind of a three-legged stool where you have, first leg is talking about, understanding the platform, understanding how to trade, understanding what trading is, all the basics and platforms and tools of trading. The second leg is, how do you generate your own ideas? What ticker should I trade? What buys should I have? When should I enter? How do I do a trade plan? What is my risk management? And multiple other things that will allow you to know when to trade or what is a valid trade. And then the last, most important, I believe, leg of the three-legged stool to be a strong, consistent trader is emotional, like managing your emotions in trading. So, you don't have to manage your emotions, but you have to be aware of your emotions and understanding that the brain and mind that we bring to the market is a standard default human brain that is all about self-preservation. It is all about, win or lose, a feeling. It is not about, process performance. It's not about probability. All through life, we are taught and we learn that you can achieve success by working harder, doing more, by having the best plan, by figuring out all the secrets and everything like that. But trading is not like that. Trading truly is probability, and if you don't believe that, then you will be stuck, making poor trades. And the reason for that is that I can have a perfect, and I mean perfect trade plan, but it doesn't matter unless I execute that trade plan. So I'm going to go over this one example here. This is the one single losing main trade that I had this week and as part of this video series. And I think this is a great example of, emotional mind completely overriding my rational mind. And so, it's important to understand that your emotional mind is stronger, it's more powerful than your rational mind, and it will take over unless you learn how to control it. And I'm in the process of beginning to learn that. I've done very, very well with my platforms, with generating my own ideas, and all the other things that I just talked about, the other two legs of the stool. But it's been quite obvious to me this last week with the insane opportunities in the market that I am not managing my emotions well, that I am still using my old brain, that I do not accept probabilities, and that I'm trying to win and outsmart and outfigure every trade. And the reality is that you cannot, outsmart every single trade. You can't just look at level 2 and know. You can always have an idea. You can always have a great idea that, go around a certain price, that it will act a certain way-ish, but it can never be exact and you can never know for sure. And so, assuming you're going to win or thinking you're going to win or thinking you know it all, it's just going to really mess up the trade and generate those emotions that you really need to control. So, Yeah, there's so much I want to talk about on this video series, but really those are the main things. Is that just knowing you do have those two brains, knowing one is a stronger drive. We really have to, a lot of things. If you are an emotional trader, I believe some people are a little bit more prone to be, less emotional or more probability mind based or whatnot. But if you are very emotional, there are things that I believe you have to do, and it starts with, regulation of your emotions, your hormones, and everything else by breathing, by realizing the emotions are there. All those voices that are talking in your head when you're afraid during a trade, just kind of screaming at you, and understanding what those emotions are, turning towards them and recognizing them and accepting them and understanding them, and then allowing yourself to trust the process with a probability mind. So, get rid of the old mind and apply these skills, so that when you're in the situation, almost before it even happens, you're going to be ready and you're not going to let those emotions guide you. So, to do well in trading, you have to perform well. It's not a win-lose. It's all about probability and performance, and you need to focus on performing and not controlling the outcome and trying to win trades. Because if you perform well and you have an edge, the money will follow, and it's something you have to trust, and it's something you have to learn to do, to trade with less emotion. So you have to give up that certainty, because there is nothing certain in the markets, and you need to be comfortable with that and okay with handling probability. And when you have a loss, as long as you performed well, it doesn't matter. So I want to take a look at NVAX. I want to take a look at this video series over the course of 5 days, 5 videos, 1 video per day, and just review my trades. But this was my one losing trade, and I just want to review this trade and show you guys, how the emotional mind will control you, what you will be feeling, and what will happen as a result of that. So, anyways, so this was on November 9th, the first day of this week, this fantastic week. It was a really great week. It was 5 green days, all trades, winning trades, except this trade here. And NVAX was, I believe, should have been fading. It should have been gapping down. PFE had just released news that they had 90% success in a vaccine, and all these kind of second-tier vaccine names, INO, SRNE, VXRT, and NVAX, I believe should fade, and they were fading. This had gone down, $20, from highs, gapping down, and so I was like, well, I would love some pops. Then it released a news release saying there was FDA fast track, and you got to understand, first of all, this is no news. It doesn't mean anything really value for the company in the present day, and for this to shoot up $10 on that news was hilarious. This was an easy short in that minute that it shot up, but I missed the move, and but I watched pops. So you got to understand as well, the market cap on NVAX is massive. So for this to move $10 is considerable. So when this popped back up to 93 from 83 on no news, when I thought it should be a fader and gapping down on the biggest news about COVID vaccine, I was laughing. So but it's pre-market, there's no volume, so I was quite cautious and careful, and I shorted very, very small size 93s. But it began to grind up pre-market. So when I entered this trade, I know the stock, I know it moves large, and I know it's hard to find the top. So my trade plan, my rational plan, was to short, expecting a fade back to around lows or lower, hopefully, and my risk was essentially 100 plus reactive, meaning if it goes over 100 and it holds and does grinding and just continues on the open market, then I will take it off, because honestly, I'm just wrong. I'm totally wrong on my idea. Let's face it, if it's after 10:30 a.m. and it's holding over 100 and it's grinding, it could do anything, right? Because you can never force it, you can never assume. So that was my trade plan. But this was pre-market, and I was short small at 93, and as it grinded up towards 97, I'm down $4, and I'm thinking to myself, wow, you know, this is thin, there's not much volume, and it's grinding against me, and this is pre-market. And fear begins to build in me, and I refuse to accept that feeling. I refuse to, you know, let it in and know what it is. And as the unrealized P&L builds up, you know, even though it's still part of my trade plan, I've identified this trade by fundamentals, technicals. I know that it's a trade in my arsenal that has a high probability of working, and that is how I've identified it. And so, you know, I should be feeling no emotions here. If it goes against my trade plan and grinds over 100, holding higher lows open market, then I'm wrong. But otherwise, you know, it's not even about being right or wrong. Then I'll just take it off, and it will be, you know, will be a loser, but I will trust my process, and I should have been right. You know, 9 times out of 10, this should have faded, you know, plus 100 fit, plus 100 grind. So I should have trusted the process, but my fear as it built up and built up and built up, and I started justifying my mind, thinking, you know, all these things are screaming in my mind, well, it's pre-market, well, it's thin, well, you know, it shouldn't be doing this, what is going on? You know, and all these emotions began to build up in my mind, and as it ripped up very quickly to 99, even though my trade plan was 100, it was still pre-market, and I stopped out. I don't remember what it was. I think it was maybe 99.6 or something, literally at the top, for a loss of, for myself, it was quite considerable. It was about a day's goal. But, you know, like within my limit for range, as I entered here, it was my risk. You know, 100 over under, so it wasn't a massive loss, but it was substantial for pre-market, and immediately it dropped back down to flat to 93, you know, right after I stopped out. And, you know, I sat there and I just thought to myself, wow, if I had only followed my plan. So, you know, the stock, I quite frankly, I took off radar after that loss because I had a bitter taste in my mouth and I didn't fully accept the loss, either another part of emotional trading. And, you know, I look back later in the day and there was a fade from 100 plus down to, you know, 82, 83 after news. So, you know, it's a tough thing to watch, right? It's a tough thing hindsight, and that's all about trading. But the reality is that if I had followed my plan, if I kept a rational mind, I would have kept short at 93. I would have waited until open market, or added here slightly, maybe averaging up as it was near my risk, but I probably shouldn't have because it was pre-market. And, you know, added here open market, this is, you know, 950, 100 plus. You can add a little bit to see what it does over 100, giving me a average of, you know, so if you short 100 shares, let's say at 93, and you short 100 shares at 100, giving you an average of, you know, 96.5 or something like that. So you got an average here, comes down, you know, you're right, comes down, so you can add 1030 versus VWAP. So suddenly you're short 300 shares, you know, 95, 50 average, and cover end of day swing, right? So you're short 300 shares, 95, cover 85, that's $10, and that's $3,000. Whereas here, 100 shares short, stop out 100, I lost 700. So, you know, overall the account difference was $3,700, which is insane for one trade of one day of the year. So, you know, this just shows how simple it is for the emotions to take control of the trade and not allow you to trade your plan, because my plan was simple. It was very, very simple. I did not follow my plan. I stopped out because of fear. And so this video series is going to be focused on understanding that fear for each one and reviewing each trade so I can learn from it and we all can. So let's get into it.